everyone. Welcome to another edition of of performance management. In today's class, we shall look at a on the question on the cash budget. Don't forget that in our previous lecture, we've been able to we've been able to explain the cash budget as a type of budget. That is, the end of the period, we want to know if they actually have a cash balance at the end of the period, right? And that is what we want to do for today. Right, we'll be looking at two questions. One question from this part and the second question from May 2021, May 2021, May 2020, May 2015 question 2, May 2015 question 2, and that the cash budget as well. Right. Okay. Brookable Limited is preparing for the last half of the year, and you as the cost accountant have been requested to prepare the cash budget for the third quarter of the year. Right. Don't forget that from January, February, March is first quarter. April, May, June, second quarter, right? July, August, September is the third quarter. October, November, December, that is what is fourth quarter. The following information are what are available, right? The following information were available. Sales, 20% of monthly sales are in cash, which means 20% of monthly sales will be in cash. Everything should be like 100%, right? If 20% will be in cash, what will happen to the balance? Why the balance is on credit? That is your receivable. Collection from receivable are as follows: 60% in the first month after sales, 20% in the second month. Class, 60% in the first month after sales, 60% in the first month after the sales, 20% in the second month, right? So in the second month should be 60 days, right? The first month should be 30 days. That is the technicality I want you to understand, right? The balance after considering 1% bad debt and 5% discount on outstanding balance in the third month after sales. In the third month after sales should be 90 days. If you receive 20% cash, then 60% in the first month after sales, 60 plus 20, 80. Then 20% in the second month, right? The balance after considering 1% bad debt and 5% and 5% discounts on the outstanding balance in the third month after sales. So we have to deduct after we've considered the bad debt of 1% and 5% discount on outstanding balance, right? Purchases are usually 60% of the month's sales. That is, the month at which they made the sales you charge 60%, right? Purchases are usually 60% of the month sales, right? The month sales is the cash sales. The month sales is the cash sales, not credits, not the one that they will pay in 60 days or in 90 days. Purchases are usually 60%. So 60% of the month sales, you have 60%. So you have remaining out of that, remaining like 40%. And are paid for 70% in the same month. Oh, in the same month. So which means that when you want to get your purchases are usually 60% of the month sales. Your purchases will be 60% of the month sales, which is the car sales, right? And are 70% for 70 and are paid for 70% in the same month. So which means that the purchase on credit will be like the 70% of that amount and the 30% in the following month. In the following month, there will less 2% discount on the total purchase, right? On the what? On the total purchase, we'll get there. Loan, 500,000 is expected to be approved by the bank on the first day of August, payable equally over 12 months. Class, payable equally over 12 months with 1 month moratorium, right? And 1% interest on the outstanding. If they have any outstanding, the loan is expected to be approved by the bank on the first day of August, payable equally over 12 months, right? With 1 month moratorium and 1% interest on the outstanding. Class, what is 1 month moratorium? What does that mean? What does that mean, class?
1 month
Hello?
what, sir?
Are you not in this class? 1 month moratorium. This 1 month moratorium given to them. Okay, let's move on.
Delay.
Then,
Sounds like delay.
okay, thank you. Then, and 1% interest on the outstanding. Salary. What happened to salary? Salary deductions are paid on preceding month basis. What does that mean? That is why I said cash budget is English. Once you don't understand the English, forget it. See, just forget it. If you don't understand it, if you can't interpret the English, forget about cash budget.
Okay. So it means the salary for the last month will be paid in the next month.
Thank
Like
you.
let's say this month of April now, they will pay the one for March.
Thank you.
And that
And that is
moratorium, does it mean that there won't be any interest or anything on it if it is being stated?
It means that the loan will be suspended temporarily for 1 month.
Okay.
thank you.
Thanks.
We'll still come back to that side. Thank you. The sum 951,510 being fixed deposit will mature in the month of July, which is 500. Fixed will mature in the month of July. The sum being fixed deposit, they make a fixed deposit of 950, will mature in the month of January. 500 will be reinvested same month with 0.5% interest credit the following month. Interesting. This question is a very interesting question. Okay. What is the interpretation to this, class? You make a fixed deposit and it will mature in July, right? That your fixed deposit is your money, right? Is what you have. Then you now reinvested it same month with 0.5% interest credit the following month. So which means that in the following month, which is July, August, you will receive 0.5% on the what? For the interest. On the interest, right? In the following month. The following month is what, class? August. Right? When you out of the 951, you now say, okay, we matured in the month of July, then you took 500, you reinvest it. When you reinvest it, the interest, they will pay you interest. And this interest, what will happen to it? You will receive this interest the following month. What is the following month of July? That is August. We'll get there. Cash and cash equivalent balance as at the end of June is this. So this is the cash and cash equivalent, just like the way I explained in our previous lecture, right? That it is possible to have a cash balance, right? It is possible to do what? To have a cash balance. So this is cash balance, and it is possible to have an overdraft as a balance, right? So the next is what? Bank charges, right? The next is what? Bank charges. So what will happen to the bank charges? Yeah. Bank charges is 1% of total outflow from the bank payment for the month. So all the total of the total outflow from the bank, any money, all the total money that you paid out, there is a charge, there is a charges to that, right? And it will be 1% of the total outflow that you paid out for the month. Interesting. So additional information is as follows. Can you see it? The sales, the net salary, expenses, salaries, deductions. So what does salaries deduction means? Let's start the interpretation here. Salaries, sales, net salaries. What does that mean? Net salaries and salaries deduction. What is the difference? Class.
The net is when after all these allowances have been deducted.
Okay. Okay. So what of the salaries deductions?
I feel like those are the allowances which has been deducted.
Okay. That's fine. That's fine. That's a very good one. Prepare a monthly columnar cash budget for the third quarter. So don't forget, you want to prepare a cash budget anytime, any day. There is a format to that. Your inflow, which is your receipt, you minus it from your outflow, which is your payment. You have your net cash flow. If you have cash balance that you brought forward in the month of December, you add it or you subtract it. It depends. If it's an overdraft, you subtract. If it's a cash balance, you add it. Then you have your closing balance. And again, when you want to prepare a cash budget, again, you need to do some workings, right? Then, when you want to do workings on cash budget, you have to make use of, don't forget, the cash budget that they say we should prepare is based on third quarter, right? So when you want to do your workings, you need to bring all the months. April, May, June, July, August, September, October. That will be your workings, right? Workings. Then what you need to do is that in the main required, you just do the format cash budget for the third quarter. So class, third quarter we start from when? Third quarter we start
July.
from when?
From July.
Okay, from July. That's a very good one. From July, right? So we start our workings. So don't forget, cash budget is English. If you don't understand the English, you miss it, right? If you don't understand the English, you may miss it, right? So now let's go on the first. Okay, so workings, okay, from July, right? What's the name of the company? Was it stated? What's the name of the company? Was it stated?
Breakable.
Okay, breakable. So we can have suggested solution. Suggested solution. That is why I purposely want us to start from here, so that you will understand some technicality in cash budgets, right? Well, yes, because you will see more of 30% days, 60% days as we move, right? So you get familiar with it. More Bray Cable, right? Limited, LTD, cash budgets, for the third quarter. So the third quarter, we start from July, August, September. Is that September? Any question? Is that okay? I'm sharing my screen. Please confirm. Can you see my screen?
Yes, sir.
Okay.
Yes, sir.
Yeah, it could be your network. Please log in, log out.
Sorry, sir. Which diet question is this? Sorry, sir.
Just don't worry about the diet. Just focus. If you can see the screen, you can see the question. So don't worry about the diet. Just let's move on with this, right? Thank you. Actually, one of the foundation questions. So we are starting with workings. Don't forget, when you want to do your workings, you bring in all the months workings, right? When you want to do your workings, you bring in what? All the months. So I've sent the question to the platform. Check the second this thing. So if you want to see the question, check the second question that I sent to the platform. So class, April, May, April to October, right? April, May, June, July, August, September to Wednesday, okay? September, October. Okay. September, I can just abbreviate October. Okay. So we start our workings with this, right? Now, let's pick it one after the other. Don't forget, class, your Naira sign to be here. Naira sign. Presentation matters a lot, right? Present your work this way, your end mark, right? Now, don't forget the format. Your inflow, which is your receipt, right? And from your receipt, you will have from the question, we are given sales, right? There is a sales here, and that is part of your receipt, what comes in, right? Now, if you want to start with sales, and what happened to sales? Now, the sales is that the sales 20%, what will happen is 20% will be what? 20% of monthly sales are in cash. Monthly percent, sorry, 20% of the what? Of monthly sales are in cash. So we can now go back and say, what is the sales? 850. Okay, just give me figures. You have the question, right? Check the platform quickly. Are you there?
April 850.
Okay. Thank you. So let's do it this way. Should we? Okay. 850.
900.
I'm coming. Sorry. Let's just arrange this way. Okay, coming. Okay, arrange this. Okay. So April is 850.
Yep.
850,000. May is what?
900,000.
900,000. Next.
1,200. Well, 1,250,000.
1,250,000. Next.
1,520,000.
1,520,000. Next.
1,650,000.
Okay, Kevin. Wow. 1,650,000. Okay.
650,000.
1,650,000. Okay. Next.
1,800,000.
1,800,000. Next.
1,400,000.
1,400,000. 1,400,000. Okay. Sorry, I need to arrange these sales, right? Sales. So this is the sales, right? This is the what? This is the sales. You can do the sales like this. You can just cross it this way, right? Now, out of these sales, what happened to it? You will have a cash. There will be a cash sales. Just a minute, please. Cash sales. How many percent? Cash sales.
20%.
Okay. Now, please, class, follow. Let's quickly go back to the sales, because if you didn't get it now, you may miss it, right? 20% of the monthly sales are in cash. 20% of these are in cash. 20%. So 20% of April, what do you have? 20% of 850?
170.
170,000.
170,000. 20% of May, what do you have?
180.
180. Next,
50.
250. Next,
304.
304. Next,
330.
330. Next,
360.
3 what?
360. 360.
Okay, 360.
280.
280.
280. Okay. So we've gotten the cash sales to be what? To be 20% of the sales. Now we move on. What is the receivable? Right? Receivable says that 60% in the first month after sales. Class, what is the first month after sales? What is the first month after sales, class?
May.
May.
Good. Good. The first month, the first month after sales, right, is what? Is May, right?
May.
Now, in this case now, how many percent? 60%, right? 60%, you can
Yes.
have receivable, right? Your receivable will be 60%. That is 30 days. You can put it or you can just leave it. Now, 30 days. Now, what is the 60% of April? What is the 60% of April?
10.
What do you have?
510.
510.
510.
510. What is the 60%? 540.
540.
What is the 60% of June?
750.
750.
750.
What is the 60% of July?
912.
912.
12.
What is the 60% of August?
990.
990.
You are
990.
not understanding again.
So what is the 60% of 1,800,000?
1,000.
1,000 what?
80 naira.
1,000. 1,080,000 naira or 1,080 naira? Which one?
1,080,000 naira.
Okay, 1,080,000 naira. Right? Now, the first question is the cash sales. The cash sales is 20% of monthly sales. The second is that the collection period of the receivable will be 60% in the first month after. In the first month after sales. In the first month after sales. After sales. You make a sales of 850 in the month of April. You will receive the payment after the sales. In the month after the sales. And what is the month after the sales? Which is May. You will receive April sales in May. You will receive May in June, June in July, July in August, August in September, September in October, October in what? In November, which we don't need it, right? You can create a column for that, right? Now, we charge 60% of 850, which will be paid in May. We charge 60% of 900, which will be paid in June, which will be received in June. That is why I said you need to pay attention to this part. It's very important. Please. Now, is that clear, please? Is that clear? Are we good now? This is the person that says she did not understand now. Are we good now?
We are good.
What's the number?
Okay. Now, if this is established, 20% in the what? In the second month. Class. 20% in the what? In the second month. It is a very technical question. If you don't pay attention very well, you may likely miss it up, right? So please, let's move together. 20% in the second month. Now, what is the 20% in the what? In the second month. So we need to check in the second month. So which means that the April in the second month, which means that April sales will be paid in June. Is that also in the second month? April, May, right? Now, the second month means 60 days. Class, it means what? It means 60 days, right? Am I communicating, please? Or let me
Yes.
go back again.
Yes, sir.
Let me go back again. 60% in the first month after sales, then 20% in the second month. Now, in the second month, what do we have? How many percent? 20%
20%.
in the second month, which is 60 days in the second month, right? So 20% of 850, what do you have? 20% of 850, we give what?
170. 170.
We give 170, right? 170. So you still move again.
180.
20% of 900, what do you have?
180.
180. Right? We pick 1, 2. Is that also that give us this? So 20% of 1.2, 1,250,000. What do you have?
250.
You say what do you have?
250,000.
250. I'm coming. Right? 20% of July. What do you have?
304.
304. I'm coming. If you have question, I'm coming. 20% of August. What do you have?
330.
330. You can do September like that. September, October, right? Because what we need is just the third quarter. And the third quarter is we just need the July, August, and September. Right? That is what we need. Okay. Please, you can omit your mic quickly. Please, the person should omit his or her mic quickly. Hello, who is the person that wants to ask questions? She will omit his or her mic now. Okay. That's fine. Okay. Class, are we good?
Yes, yes.
Yes, sir.
Okay, okay, that's fine. Okay. The balance after considering 1% bad debt, after considering 1% bad debt, right? After considering 1% bad debt, 1% bad debt, and 5% discount on the outstanding balance in the third month after sales. Class, interesting. So what is the balance? What is the balance? Interesting. What is the balance, class? What do we have as the balance?
10%.
10%. Okay. Any other
Balance should
person?
be, the balance should be
We have 20%.
it's 14%.
20%.
Balance is 14%. 14%.
Balance is what? 14.
Yes,
How is it 14%?
because you have to deduct the bad debt, 1%, also 5% discount from
Okay.
remaining 20%. You have 14%.
Okay. 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 That's fine. That is another way you can use actually. So that is why I said, okay, why is it 14%? Okay. How should we present this? 14%. How should we present how do we present this? How do we present this? I'm coming. What is the presentation? Because presentation actually matters a lot, right? How do we present this? Class, how do we present this? Because one thing is to know what you want to do. The second part is the presentation, right? So I think we need to
We can
charge the
present
20%. So once we charge the 20%, we will now remove the bad debt. Is that not so? Can we do it that way? Hello, class. Can we do it that way?
Yes,
why
we can.
not we remove the bad debt?
Yes, sir.
We can remove the bad debt and charge whatever is left.
Another thing is that you need to show how you arrived at that your bad debt and all that. Do you get? You need to actually show it.
Okay.
That's what I'm saying. You need to actually show it. What should we do for the presentation? I'm coming. What should we do for the presentation? How should we present this? Okay, that's fine. 20%. 20%, right? And 20% will be paid when? The balance after considering 1% bad debt and 5% discount on the what? On the outstanding balance in the what? In the third month. So now, what is the third month, class? Don't forget, the first month is 30 days. The second month is 60 days. The third month will be what, class?
90 days.
90 days, class. And that is the technicality of this question. That is why I said, if you don't know how to speak English, you don't know, sorry, there are two different things, You may know how to speak, but you don't know how to interpret. Is that not so? So that is 60 days, right? So 60 days, this is, from year to year is 30 days. Can we see it? April,
It's 90 days.
Is it not 90
okay,
days?
It's 90 days.
It's 90
Okay. So it's 90 days. 90 days will be what? This is 30, 60. 60. Yes, it's here now. Abi?
Yes.
Okay. So what do we have? What is the 20% of 850?
170.
170. Please, when it is 5 minutes to end this the meeting, please let me know so I can create a new link. Thank you. Right. So what is the 20% of 900?
180.
180.
180.
Okay. What is the 20% of 1,250,000?
250.
What do you have?
250.
250. Where do we stop, sir? This is, we've done 1, 2, 3. Okay, what is the 20% of 1,520,000?
304,000. 304,000.
304. Please, let's check this thing again, because if not, we'll just miss it, right? First one is 20% of 850, which is 170. Please confirm. 20% of 900, which is 180. 20% of 1,250,000, which is 250. And 20% of 1,520,000, which is 304. Right? This is what? 304. Then we can now deduct bad debts of the balance, right? The balance after considering 1% bad debt, 1% bad debt, and 5% discounts on the outstanding balance in the what? In the third month. So 1% bad debt, 1% bad debt. So what is the bad debt on the outstanding balance, which is the 1% of 160? What do you have? 170. What do you have? Hello?
1,700.
1,700. 1,700. 1,700. Next, what is the 1% of 180? What do you have?
1,800.
1,800. So what do you have?
1,800. 800, not 880. 800.
Okay. Next,
August
what do we have?
1,000.
1,000 what?
No, this one is
Sorry,
1,800. 800.
1,800. This is it now. 1,800.
Okay.
Yes.
The next one, 2,500.
2,500. Next,
50,040 naira. 3,000.
3,040 naira. So what is the 5% discount on the outstanding?
85
8,500.
for the first one.
Please, how did you get 85? 5% or what?
Of the outstanding balance. You know, this is the outstanding balance now. Is that not so?
5% of 170. Am I right?
Yes. Okay. I'm coming.
The next one is 9,000.
I'm coming. Ozioma, the first one is 60%. Can you see it? Which is 30 days. Come.
Yes, I can.
30 days. The second one is 20% in the second month. That is 60 days. The next one is 90 days, right? Of the second month. So the 5% is on the outstanding balance of this. The 1% is on this. The 5% is on this. Do you get?
So you're saying the bad debt and that of discount is on these 90 days now?
Yes, that is what the question, that is according to the question. The balance after considering 1% bad debt and 5% discount on the outstanding balance in the third month after sales.
Okay.
So what do we have here? 8,000 what?
But sir, are we not going to remove the discount before we calculate the bad debt?
No, don't worry. Don't worry.
Okay.
That is why we put it in brackets.
Okay.
That's why we put it in brackets. Okay, let me plug my system. So what do you have? Quickly.
8,000.
8,000. We may need to go over these things again if these figures are correct, right? So next.
Is 85 now?
What is the 5% of 170? What do you have? What is the 5% of 570?
85.
8,500.
So what is the 5% of 180?
9,000.
So what is the 5%?
12,500.
So what is the 5% of 304?
15,200.
15,200. Right, so let me quickly need to create another link, right? So we can continue from there. So we need to check the figures again. Right. So thank you. So what is the total sales collection? What is this total sales collection? Just give me the one of July and August, because that is the one that we need, right? Just give me the who is finally the report. So just give me for the one of July and August. I just need the balance for the month of July and August. Quickly, class. Just add.
That's the sales figure minus all the other expenses. The other.
Yes, you just do July is 304 plus 750 plus 180 plus 170 minus 1,700 minus 8,500.
Sir, please, I want to ask a question.
Go ahead.
Okay. Based on what you just explained now, that we assume that the rest that is left is on credit, which is 100%. So when I
Mm,
try to apply it, that
mm.
third one was giving me 136. And when I tried to do everything together, when I added it, I still got the same 850 from the beginning. When I added everything together.
You have 850.
You know, the first sales, the total sales was 850.
Mm,
So, and I removed 20%. So the 20%, which gave me the 170. So after that, and that's okay, 80% times, after removing 20%,
oh,
I have 80% left. And that's 80%
yes.
times 20%. I got the answer of that one. Next one, 80% times 60%. I got that one. 80%
Oh,
times 20%. When I added
you have
everything together, I still have the same 850.
the same answer, Abi?
Yes. But what I'm
Oh,
saying is that 90 days is now 136.
okay. The 90 days is 136.
136. Why
So
the
how
60
come?
days is 408? Why the 20 days is 136 too?
Okay. Do we have the same thing?
No, we
Do
didn't
we
have the
get
same thing. We didn't have the same
oh,
thing. Based on your explanation, I tried to apply it to whether I'm going to get the same 850, and that one gave me the same 850. But that's not what we did there.
okay? So which means that these 60 days we didn't arrive at the same thing, at the
Yes,
same
we didn't
answer,
arrive at the
right?
same thing. What I did was
But
I said 60 days multiplied by 80% that is left on that cash. So that one gave
mm,
me 408.
credit, that is the credit. 408. You now minus the bad debt, right?
No, I've not minus. I just did everything to see whether I'm going to arrive at that 850. Based on the explanation you just explained now, I arrive at that 850. I'm not looking at it that our 60 days and 90 days, the answer is not the same.
Okay. I get your explanation. But if you look at the question, right? If you check the question, you will see that the question says that 60% in the first month. Please, the person should mute his or her mic. Who is that? Right? The question says that the question says that 60% in the first month after sales. Right? If we truly interpret this well, right? 60% in the first month after sales. What is the first month after sales? That is April, May. Is that not so? That is April, May, 60 days, right? So which means let's check this again. 60% of 850, we have 510. 60% of 900, right?
Sir, that's why we said 60% of 850. So what I now
Yes.
did was, when we did the cash, we still have 80% left. So I had to multiply by 80% of that cash. So that's why I got that 468.
For June.
Yes, for the first, yes, answer for April will be for May.
Yes.
That's why I got the 408 before 68.
Okay. Let's wait first. We're coming. Now, let's interpret that question again. I understand you, right? 60% in the first month after sales, right? What is the first month after sales? Is 850. Is that not so? After sales, after they make the sales, is what? This is it. When they make the sales, right? Right. Now the second one is if you make it like this, so 60% of 540, right? 60% of 540, then 60%, for these people now. When you guys should join when others are joining now. Then 60% is itself. Then 60% of 1,250,000. We have 750, right? 60% of this, please just confirm if the figures are correct, right? Then 60% of 1,520,000 should be 912. 60%, 60%, 60%, okay. get 60% of 1,650,000 is 99, and 60% of this is this. Okay. Now I understand. Now, interesting. Now, what happened here is that, it's a very technical question, like I said, right? Like I mentioned, because it is more than, if you look at it, technically, it is more than 120%. Because, it is technically, it is more than 120%. Is that not so? Because if you have 20% of monthly sales are in cash, why the balance is on credit? The balance ideally is supposed to be 80. But now, you have 60, you have 20, and the balance is still telling you that the balance after considering 1% bad debt and 5% discount on the outstanding balance. Right? So, which means that what we're supposed to do is that we're supposed to say, okay, so which means that we're supposed to say, okay, we charge 20% of the sales. When you have your 20% of the sales, you have your receivable, right? Now, when you have your receivable, then you can now apportion it. That 60% will be paid this, 20% will be paid this. Then the balance, which is 90 days, will not be paid. So the total balance will be 100%. Olalekan, my namesake, right?
Yes, I'm
Are
with
you
you,
there?
sir.
Do you understand? Do you get?
Yes.
See, it was an interesting. See, this question, I like the question because the question want to test your understand whether you understand this English that we speak. We speak English, but our interpretation of English, because you are actually right. It's supposed to be 100%, right? Now, the question we should, I was like, okay, if this is 100%, this is balance. Balance supposed to, when you remove cash, you're supposed to have, what is it called? 80. Then the total will be 100. So if you have 20% balance, that means you've charged 20%, you've charged 60%, you've charged 20%, you still charge another 20%. The total will give you what? 120%, which is above 100%. It's supposed to be 100, class. So we want to know our receivable, total sales collection. Total receivable, total sales collection. What we will do, what we're supposed to do is that the 20%, we will remove the 20% from 850, class. So when you remove 20% from the 850, you have your receivable, total receivable. Then you will not apportion it. That, okay, 60% in 30 days, 20%. Because if you did not do it like that, right, you have overstate your budget. You have what? You have actually overstate your budget to be above 100%. Class, am I communicating, please?
You are,
Hello?
sir.
Am I communicating, please? Hello, class?
Yes, sir. Yes, sir.
Yes, sir.
Okay. Now, we move, right? I like the question, right? You want to test us, right? And that is it. If you don't have any question that gives you headache, right? It means you are doing, maybe it means you are not learning, right? I didn't even touch this question before I entered this class because I believe it is cash budget. Now, Olalekan now draw our attention to something that is very important. Thank you for that. And I'll go back and reason that, okay, this thing is above 100% now. How do we have 20%, we have 60%, we have 20%, we still have 20%. So which means that what we want to determine is the total receivable for the month, right? Now, we move here. So what it indicates is that the cash sales is already included. That is why we have to remove that 20% so that we will not overstate our budget, right? We will not overstate our budget. So quickly, I'm coming. Quickly, we can have I like the way Olalekan actually mentioned draw our attention to it. Not like someone that will tell you that what you are doing is wrong, right? So total credit sales or total receivable. You could say total credit sales or total receivable. So when you subtract, what do you have? When you subtract, what do you have? Hello, class. 850 minus 170. Quickly.
680.
680. Right. Good. Come, I need to plug my system. Right. It's a very technical question. I like it. Mute your mic. Mute your mic. Who is that now? Okay. So what do you have here? Quickly. Hello.
Hi.
Yeah, now give me figure. Subtract it now quickly, class.
720.
720.
It's
No, first one
680
was
now. How do you
680.
get
680. Next.
720.
720. Next.
1,000.
1
1 million?
1,050,000. 1 million. Okay.
Just 1 million.
Okay. Next.
1,216,000.
1 million what?
216,000. 216,000.
Okay, 216. 1,216,000. Next.
1,320,000.
1,320,000. Next.
1,440,000.
1,440,000. Next.
1,120,000.
1,120,000. So it means that 60%. So what is the 60% of 680? What is the 60% of 680? What is the 60% of 680?
408.
408.
08.
So what is the 60% of 720?
432.
432. What is the 60% of 1 million?
600.
600. Thank you, Olalekan. The next one is August. What is the 60%? What do you have?
729,600.
729,600. Very technical question. Next.
864.
864. Next.
672. 672.
672. So we need to change this as well. Right?
136.
136.
What do we have?
136.
136. Okay. Next.
144.
144.
Next.
200. 200. 200. 200,000.
Okay. 100,000.
200. 200,000.
Okay. Next.
243. 200. 243. 200.
Please, others should confirm. 243. 200. 200, right?
264. Yes. 264.
Okay, 264. So the next one is 90 days, right? So what is the 20% of 680?
136, 144, 200. Just the same figure, just for the next month.
Okay. 136,
144.
144, 200, 243. No, we're supposed to do for October and November. Well, October and November but we don't need it. The only thing we need here is the July, August, and September. So now, class, what is the 1% of, now we charge 1% of each of this and 5% of this. So what is the 1%?
1,360.
1,360. 1,360. Next.
1,440.
1,440.
2,000.
2,000.
2,430.
2,000. 2,430. Next, 5%.
6,800.
6,800.
7,200.
Sorry, are we not supposed to charge it on the credit sales?
No, now on the balance. What the question? Olaide. The question says that on the balance, not on the credit, not on the total. Look at it. Are you there? The balance after considering 1% bad debt, 5% discount on the outstanding balance in the third month. Do you get?
Okay.
Do you get? What is the third month? Is it not 90 days? Which is this? Do you get? Hello, do you get?
Yes.
Okay, what is the 5%?
Yes.
Ozioma, are you still in this class? Fumi?
I'm here.
Okay, are you following?
Samuel, yes, we are.
Okay. So 5% discount. What is the 5%?
7,200. Next one.
Okay.
For the 144, 7,200.
Okay, I'm coming. Okay, 5%. What do you have? Hello?
7,200 for 144.
Okay. No, for July. Okay, so what is it for the 5% of 136?
I mean, 6,800.
6,800. Please, if you did not understand, let me know.
7,200.
Next.
10,000.
I will explain that part again. It is a very technical question, honestly. We want to... Next. 8,000. 12,000. 150. Now, class, this question, it is a very technical question, right? Now, the usual, I know, right? The usual cash budget, right? It is that cash, class, that cash, we're supposed to add it with our total receivable to complete the percentage, to complete it 100%. That is what I know, right? And this question actually changed my mindset, right? That sometimes you need to complete the receivable percent. The total is 100%. Now, if we are adding the method we use, now if we decide to add the what is it called? The cash, right? The cash of 20%, we have overstated the budget. And automatically it becomes what? It becomes 120%. And it should be 100%. Now, receivable, that is why they say balance. So which means now technically, which means that, okay, since the total sales is this, the cash is this. So the question want to test our understanding on what? Receivable. Whether we understand what? Receivable, right? Now, which means that you need to deduct the 20%. Ideally that third what is it called? Third line is not there. We would have just do it as 100%. The 20% for cash, the 60% and the 20%, and the total will be what? 100%. Right? If that top paragraph is not there, but since it is there, what it means is that the cash sales, you remove it so that you have your receivable, and your receivable will be what? 100%. Class, am I communicating, please? Am I communicating?
Yes, sir.
Okay. Ozoma, Pere, and
Yes,
where is Fumi?
Sarah, yeah, I'm here.
Okay. Fumi.
I'm with you, sir.
Okay. Now we move, right? So we'll just do the one for July, right? What do we have? What is the figure? July. 1,216,000. What? Okay, this is okay. 600 plus 144, right? 600 plus 144 plus 136 minus 1360 minus 680. Don't forget, you've used this already. So please don't add this. Class, don't add this. Don't add this figure here, right? Right? Because that is the figure you use for the 30 days and for the 60 days, right? So 600 plus 144 plus 136 minus 1360. What do you have?
$871,840.
671,840, right? That is the receivable.
871.
800 and what? Sorry.
71,840.
That is the total receivable. Is that not so? The total receivable is 800, and then they make a cash sales of 20%. Is that not so? So now, just give me figure for this. Total receivable. Okay. Oh yeah, now give me figure. Sorry, give me figure.
871,840.
871,840. Next.
1,064,960.
1,064,000.
No, 64,960.
960. Next.
1,295,200. 200.
Next. Next. What do you have? Quickly, class. Quickly. 672 plus 264 plus 243 minus 2,430 plus 12,150. What do you have?
1,164,420. 1,644,420.
164. 1 million.
1 164. 1,164,420.
Okay,
Mm.
right. Now,
Yes.
so class, cash sales. The cash sales we don't need for May, April, May, June. What is the cash sales? The cash sales for July. Class, what is the cash sales for July? 304. Is that also? The cash sales for August is 330. For September is 360. Right? Right? The person should meet his or her mic, please. 304, 330, 360, 360, and what? 280. Right? So what is the total sales collection? What is the total sales collection? Total sales collection. Total sales collection. So add 871, 840 plus cash sales. What do you have?
For September, 1,655,200.
16
No, for September, 1,655,200.
55
200.
100. Next,
For that of July, 1,175,840.
175
175,840.
840. Next, next. Hello, quickly now. We
For
have about
August,
how
For
many
August,
participants?
1 million.
1,394.
1 million.
Okay, continue.
1,394,960.
Please, we have about how many participants? Please, let's make this work easy so that we can move from here, please. Next. So we don't even need October. It's just July, August, September. Just, you can fill in. What do you have? What do you have? If you have figure, give me figure if you have figure.
1,144,420. 420.
Okay. Class, who did not understand what we are doing here? If you didn't understand, let me know. I did not understand. Do you have anyone that did not understand?
That October is 444.
Is what?
444.
It's not
Not
420.
It's not 144. It's 444.
Okay. Juliet. Okay. So this is the total sales collection. Class, this is the receivable on credit. This is the cash sales. Right? Can you see the cash sales? Right? Of course, you can't ignore the cash sales for the period. Of course, you can't ignore it. They make a cash sales and they still sell goods on credit to their customer. Right? Right? And that is how we arrive at the total sales collection of all this, right?
Sir, please, how did you get the cash sales?
Okay, thank you. That is a very good question. Can you see it here? Cash sales, 20% of 850, 20% of 900, 20% of this, 20% of this, 20% of this, 20% of this, 20% of this. So this is for July and August, September, and October. Can you see it?
Yes, sir. Thank you.
Yeah. So we are good now. Thank God. Just this part. Okay. Okay, we move to the next one. Okay, this is just our work one, right? this is on sales, right? You can put it here as on, this is for sales, right? Sales. Now, the next, what is the next note? The next note is on purchase. Right? The next note is on what? Is on purchase. Now, what is the purchase part of it? Now, listen again. Right? Purchases are usually 60% of the month sales. Class. If you want to get your, that is why the purchase is not given here. If you want to get the purchase, it will be 60% of the month sales, which means that 60% of this, 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 60%, 60%. We give you your what? We give you the purchase. Right? Then, what happened? Then, and are paid, that 60%, that's your purchase. That your purchase, right? That your purchases, right? The purchases are paid for 70% in the same month. You pay 70% as cash, your payment. You made a payment. You say, okay, payment. 70% in that same month. And the remaining 30%, what will happen? 30% in the following month. What is the following month? That is 30 days. Less 2% discount. We will deduct 2% discount. Class, are we still together, please? Are we still together?
Yes, sir. Yes, sir.
Thank you. Now, in this case, we have to do what? We have to bring in the sales because the question says 60% will be for purchases, right? I purposely bring this question so that it will expose you to 30 days, 40 days, so that when we solve more of this past question, you get familiar with it, right? So, is it like this? Okay. A minute. Okay. So purchases. %60 of sales, right? So what is the 50%? What is the 60%?
510.
We already know. We already know that it's 60%. Give me a figure. What is the 60%?
510.
510. So your purchases will be 510. Next.
540.
540. Right? 540.
750.
750. Next.
912. 912.
912. Next. Chris, are you in this class?
990.
Yes, yes.
What? Okay.
990.
Next.
180.
Do you know why you need to, when you are doing your workings, please always make sure you bring in all the months, even the one that you need and the one that you need and the one that you did not need, right? Bring all the workings out so that you can, it makes interpretation of cash balance, it makes it easy for you, right? So the last figure is what? What is the last figure?
840.
One what?
No, October is 840.
840. Class, this is your purchase. Let me do something. Right? This is your purchase, right? Purchases. This is your purchases, right? Now, if you have your purchases, or let me put it again like this. Let me put it in this way. This is your purchases, right? Now, don't forget, purchases is like a payable. Class, have you forgotten that purchases, you buy goods on credit from your supplier, they are payables, right? Is that not so? They are what? They are payables. Class. So in this case now, 70% in the same month. So you will pay your supplier 70%. Is that not so? In the same month, right? Then you now pay them 30% in the what? In the following month, less what? 2%. So it means that you are still owing 30% because you will pay it in the what? In the following month. Class. The 70% is the 30 what? Is the 30 days. Right? Is the what? Is the 30 day. Is the same month, right? They say it's the same month, not even 30 days, it's the same month. So it is not, we are taking it over, right? So 70%, let's say payable, 70% in the same month, right? So, and your purchases is 510, right? So what is the 70% of 510? 70% of 510, quickly.
35700.
35700. Next. 70% of 540. Quickly, class, quickly. We have about 21 participants. Please give me figures so that we can move, please.
378,000.
378,000. When someone is doing June, the other person is doing August. Please.
522,000. 525,000. No.
378,000. 378,000.
300 and what?
78,000.
378,000.
693,000. 693,000.
3 what?
693,000.
693. Please, someone should confirm all
Sir,
these figures.
the one for July is not correct.
Okay, thank you. What is the July?
638,400.
Thank you. Class, I'm not with any suggested solution. I'm not with anything. So any figure you just give me, I'll even issue disclaimer. That is the figure so you can go ahead, you can go and check it, right? Yes, now, because that is the figure I will put here. I'm not with anything. I'm not with anything, right? Please. So what do we have here? Quickly.
756.
So next.
588,000.
588,000.
Okay. Now,
So sorry, the one for July is 638,400.
Okay.
Mm-hmm.
So, how many percent will be paid? How many percent will be paid in the following month? That is 30 days. Is that also 30%?
30%. Yes. That's right for May.
Mm. So, now give me figure. 30% of 510. 30% of 510.
15300.
15300. 30% of 540.
162.
162. Next.
225.
225.
Next.
273,600.
273,600. Next.
297.
297. Thank you. I like that. Please, let's just make it fast. Please. We still have a lot to do, right? We need to present it. These are just our workings, right?
324.
What do you have?
Oh God, 324.
324.
324.
324.
Yeah,
Right.
1,000.
So the next one is what? Less 2% discount on the what? On the total purchase price. On the what? On the total purchase price.
Purchase price.
Sorry, please, just a minute. I received a message now that professional students CR, they're supposed to have CR. No one is joining the class. What is all this now? Oh, okay.
Sir, please put it in working so that I can be copying.
Okay. Sorry.
No, the current part.
Sorry, a minute. Just okay. 1% on the total what? 1% on the total on the total what? On the total purchase, right? 1%, I'll be 2%, and 30% in the following month, less 2% discount on the total purchase. The question did not say that, okay, the 2% is in the following month, right? The question did not say the 2% in the following month. So the question may come that way as well. Now, it's less 2% discount on the total purchase, on the total, right? On the total. Now, what is the total here? So we cannot have, what is the total? When you add 378 together, right? We don't need, we need just July, August, September, right? Let's just calculate for that one so that we can move on, right? I'm coming. So 2% discount. 2% discount on the
Sir, should we not get the total first?
No,
so that people will not be confused.
Oh, okay. That's fine. I'll just need the total of this, okay? So we can do others. I just need the total of July, August.
Just give. Let's do the
Just give,
total of September, July, and August.
July. Yeah, July and August. So give me what is the figure?
July is 863,400.
I'm coming. I don't know what is happening to my mouse here. 800 and
63,400.
836,400.
960,600. That is August.
Okay. August is what?
966,600.
Next, September.
What?
Sir, the figure for July is 863,400.
And now you guys should give me figure for September now so that we can leave here, please.
September.
2,053,000.
1,053 naira.
1,053,000.
1,053,000. 1,053,000.
Okay. So that is the only thing we need, right? So we now less 2% discount. So what is the 2%?
For July, 17,268.
17,268.
For October, 21,060 naira.
October. We don't need October. Just give me July, August, September.
September.
Is what?
21,060 naira.
21,060 naira.
August, 19,252.
19,252. So please, the class will end by what time? Check. The meeting will end. Check the timing.
5 minutes. 5 minutes.
5 minutes.
Okay, please. When it is 3 minutes, let's quickly complete this, right? So when you subtract,
The figure for August is 966 before the discount, not 962. Yeah.
so when you subtract, what do you have?
Definitely the discount figure will change.
So what is the discount figure? Give me.
Oh, is that a cake?
19332.
192,332.
332.
What is the total purchase?
There are some nuts. Like this
What
one.
is the total purchase?
Maybe
Eight, 46132. We should let the discount, Abby.
August should be reduced, though. That August should be reduced.
Please, everybody should meet. Please, everybody should meet his mic. Please, everybody should meet his mic. Please, everybody should meet his mic. Meet your mic, please. Olalekan and Pere, please. The two of you should be giving me a figure, please. Others should be at the background, please. Thank you. So now let's check what we do. Let's check it again. What happened? Okay. Now, I'm with you. So, is it 3? Is it 3? Okay, it's 3 minutes. Now, Juliet, what happened?
So the figure for August is 19332.
19332. I'm coming there. Okay, I'm coming. So let's create another link, right? So that we'll look at it again together. Let's create another link. Now, In this question, the question says that it is 2% of the total purchase. Class, it is what? 2% of the what? Total purchase price. Class, what is the total purchase price? Then we decide to use, all these figures here are payables, right? Are payables. Now, if we have this, now 2% of the total purchase, they did tell us that, okay, 2% of the amount of 70 days or 30 days. Is that not so? Now, in this case, now, what is the 2% of 912? What is the 2% of the purchase? What is the 2% of 912? What is the 2%? What is the 2%
Sir, the
of...
figure for the total sales for August is wrong.
Okay, I'm coming. Oh yeah,
What I have here is 966,600.
Yeah, 966
600.
Okay, next. Which one again?
The
So
figure
the
for
discount
the
is now 19332.
I'm coming. For 19332.
No, August. Yes, 19332.
Still wrong. Next, September. For me. For me, go ahead now.
Okay, September is correct.
Hello, can you hear me?
Yes, I can hear you now.
My question is, are we supposed to apply it on this 70 and 30 or the 60% purchase?
Or the what?
60%, the 50% purchase amount from the sale.
I can't hear you. Please, can you repeat the question again? Sorry.
For this discount,
I think your network. Okay. Go ahead.
I said the 2%, they said we should apply it on the sale. So I'm asking, is it this addition, this 70 and 30% we have to use, or the 60% purchase, this 9112?
Okay. Thank you. That is a very good question. And that is why I said we have to go back again, right? On the total purchase price, English. Okay. Now, we need to go back again, right? Less 2% discount on the total purchase price. Now, the question is, what is the total purchase price? What is the total purchase price? Right? What is the total purchase price here? Is it the addition of the 70% that was paid in that same year? The 70% that was paid, or is the total of 70% and 30%, right? Or we move to the total purchase, and we say, okay, is the total purchase. So which one are we supposed to use? On the total purchase price. Class, on the total purchase price, what is the 2%? Hello?
Is it the one calculated, or
that is why I'm asking
on the
you
one
now.
we calculated?
I'm asking the class now, which one of these are we using? Is it the total purchase? Is it the 912 we are to use, or the total purchase of or the total payable, trade payable, the total payable of 9634?
You are using 860.
Why? Is that the total purchase price?
After we deduct the discounts, then we go to get the total purchases.
No,
We
is
subtract
it
860
For
okay?
17,
each sale,
860.
each purchase in each month.
Okay, now let's go back to our knowledge of accounting, right? You know, we have discount allowed and discount received, right? Discount allowed is granted to a customer. Is that not so? Then discount received is for a supplier, right? That when you purchase goods on credit, right? When you yes, I say when you purchase goods on credit, when you buy goods in large quantity, right? When you purchase goods in large quantity, that is cash, not go and come, right? I'm talking about the cash price. Is that not so? I'm talking about the cash price, right? You say it is what? It is discount received. Plus, is that not so? It is discount received. Now, the question now is, with that knowledge, right? With that knowledge, what will be the total purchase price that we would charge our discount on? What will be the total purchase price? I'm still asking the class again. What will be the total purchase price?
So this cash budget is a lot.
We cannot take this
It
50%
can be on the
purchases
total
because it's
purchase
not 100%.
each month.
And okay.
I'm with you.
Okay, so I was saying that you are asking us to take between purchases and payables. We cannot take that of 60% of purchases because it's just 60%, unless we look for the remaining 40%. And if you look for the remaining 40%, it's still going to be sales that we will take. And for payables, you know that of April is in May, that of May is in June. So I don't know, my brain is just
Fumilayo.
Okay. Well, what I can say is since they already gave us what to use that our purchase is 60% of sales. So this 60% now, this purchases on its own it is 100%. It's just that it is 60% of the sales. But the figure we arrive at is the purchase amount, and that is 100%. So I think we have to use this purchase. Like but on the other hand, now this is the payables are in July, and we have the accumulation of numbers like 70% and 30% from different months. So this thing, come on.
Of the total purchase price. Okay. Okay, that's fine. That's fine. Okay, let's go back again. Yeah, let's go back again. In the following months, purchases are usually 60% of the month's sales and are paid 60%. Your purchases, the total purchases is 60%, right? 60% of the month purchase will give you your 100% of the purchases. That is what it means. And are paid 70% in the same month, right? 70% in this what? In the same month, right? That is, you pay the cash, you pay the cash in that particular what? That month, right? And the 30% in the what? In the following month. Now, the thing is that if you are paying 30% in the following month, you will not apply a discount to it, right? Because it is like a discount received, right? That when you buy goods, when you purchase goods on credit, you know there are two types of discounts, right? There is cash discount and there is trade discount. Is that not so? No. Then cash discount is when you pay, right? When you pay in cash, I will give you a discount. Trade discount is when you pay, when you buy in bulk, right? From the manufacturers, they will give you a discount, then you pay later. Is that not so? Now, in this case now, I'm 30% in the following months. In the following months, less 2% discount on the total purchase price. On the total purchase price. Okay. Now, first, let's go with the 2%. Let's go with the 2% of 912. I think we should just go with 2% of 912, right? So we'll come back to it. Let me see. Something is coming to mind. So let's just continue like this, right? So that we'll not waste time on this purchase. We'll come back to it probably before we prepare the budget. Something will come up again, right? We'll come back. So let's just charge, or we can leave it like this. Just charge 2% of 863,400, 2% of 966,600, 2% of 1,053,000, right? So let's just leave it like this, class, right? Or we should just leave it like this. Let's go to the next information, right? We'll leave it like this. Something will come. I believe that before the end of this class, right? So I will not waste most of our time on this, right? It's a very technical question, right? Very technical question. So we have to think something. We have to think about something so that we can be able to get what we are doing, right? Now, what is the next information? Class, loan of 500,000 is expected to be approved. Class, the loan of 500,000 is expected to be approved by the bank on the first day of August, payable equally over 12 months. Now, let's quickly pick it from there. Or let's quickly prepare our, put our information. Let's start to put our information here. Total what? Total sales collection, right? Or you say sales collection. So this sales, here is your inflow or your receipt, right? Your inflow, your cash inflow, right? So sales collection, please give me figure for the sales collection for July. July, please pick it. Have you picked it? Have you picked it? Are we good now? Right? We just, okay, don't worry. Let me just copy this. July, August. I like this question. I like the question, right? Because it's very technical, right? I want to test our understanding on the cash budget, right? It's a very good question to start with. Very good question. So, because when the question did not challenge you, believe me, you are not learning, right? You're not learning. So this is the sales collection. The next one is an outflow, which is payments. You could say this is payments. Or you say cash what? Cash outflow. Cash outflow or payments. This receipt could be your cash inflow. Class could be your what? Your cash inflow. Now, we have leave this. Well, let's just leave the space for the purchase, for the purchases. Come back to it for the end of this class, hopefully. Now, we move back the loan of 500 is expected to be approved by the bank on the first day of August. Class, you go to the bank and you obtain a loan. That loan will become an inflow to you. Is that not so? Class, it's a cash inflow to you, right? Because that is what you will use to run your business. Class, am I communicating, please?
You are communicating.
Yes, sir.
Thank you. So you can say loan in what? August. 500,000 as an inflow, right? Then to be approved by the bank on the first day of August, payable equally over 12 months, right? Over 12 months with 1 month moratorium and 1%. 1%. So now let's analyze this one after the other, right? We've analyzed the loan you receive. Then let's divide it by 12 and say, okay, you will pay this for 12 months. Is that not so? Now we go back to our workings, right? Workings. This should be work 3, right? Loan. That is 500,000 divided by 12.
41667.
That is a very good one. 41667. Okay. 667. 41667. I'm coming. 41667. Is that also 41667? Now you have 41667, and what's the question says that. Oh, no. Sorry. Okay. From the question, with 1 month moratorium, which means that if you receive that loan in August, you will not pay it in August. You will pay it 1 month, which is September. Class, am I communicating, please? Is that not so? Which means that you will pay it in what? In September. Right? So we can have loan repayments. Loan repayments. What is the figure? Loan repayments. Class, the figure. Hello?
41667. After we divided it by 12.
Okay.
41667.
667.
Yeah.
Class, please, are you following?
Yes.
Now, if this is the loan, what happened again? Let's go back again and check. What happened again? Interest. And 1% interest on the what? On the outstanding. Class, what is the outstanding? The outstanding is what you are yet to pay. Class, you've already said this loan is for 12 months. They've given you moratorium of 1 month, which means you will not pay it in August that month. You paid it in September. Now, with what? 1% interest, 1% what? 1% interest on outstanding. Now, the question is, what is outstanding? The outstanding is, you still have September, you still have October, November, December, right? And it's equally. So the outstanding will be what? What is the, what will be the, what will be the 1% of 41667? What is the 1%?
416.67.
416. Okay.
0.67.
Loan of 500,000 is expected to be approved by the bank on the first day of August. Payable, you will pay it equally for 12 months. Loan will be your receipt, will be your inflow. Then what you pay on loan becomes your payables will becomes your what is it called? Loan payment. Is that not so? Or loan repayment. Then they give you 1 month and 1% interest on the what? On the outstanding. The question is, what is the outstanding, class? What is the outstanding? What is the 1% outstanding? What is the 1% interest on the outstanding? What is the outstanding?
The one that has not been paid. So, Jesus.
Interesting, right? The one that is yet to be paid, right? Is it the one that you share equally? You know, you share it equally. 4-1, you have 4-1 CCs, right? You have 4-1 CCs. Class, what is the 1% of 4-1 CCs? That's the interpretation. Wow. What is the 1%? Interesting.
416.67.
416. Now, of August, payable equally over 12 months with 1 month moratorium and 1% interest on the outstanding. The question says that it is the 1% on a monthly basis. Is it actually stated like that, class?
Yes, I think that's what it means. So since there is already a delay, that like the one of August, you pay to September, so you have to still pay one interest on it. I guess in English, that just wants you to scam it.
Really? Olalekan. Olaide.
Well, my own understanding, I'm looking at it this way. Since they said 1% on the outstanding.
Hold on, Olaide. Hold on, Olaide.
Since they were giving the grace for the first month, so maybe we are going to deduct that 416 from the total amount. So
4166.
Hello,
no, we're not deducting. The way me I understand this thing to be is that since they're already giving you like a grace for you to pay in the following month, so you still pay 1% interest on it. So 1% of that 41 whatever will add it. That is going to be the loan repayment.
No, it should not be like that. Okay, let's look at let's look at it practically. I like the question, right? It's interesting, right? You borrow money, let's say you borrow money from the bank, 200 naira, for instance, and the bank says, okay, we will not pay you this 200 naira now. We'll pay you. No, you will pay it. You will not pay it in this January. Pay it in what is it called? February, right? Then when you pay it in February, we spread it for you for 12 months. Right? We'll spread it for you for 12 months. Now the question now is the lender say, okay, plus 1% interest outstanding. Now, you are the one that wants to collect a loan, right? And then I tell you that the one you spread, or that one that you spread, that you've not paid. It's not that you forfeit it. It's not that you did not pay that money as and when due. It is just because the question says that, okay, 1% interest outstanding. I understand already because you're trying to say, okay, if it is 1% outstanding, now we've already paid 4141. Should we say we've already paid 41667? We could say we've not even paid the 41667 because it is what we are we've not even paid it, but we say, okay, we will pay, it will be paid in what? In 1 month, which is what? September. Now, what it means is that, typically, is that you need to charge 1%, 1% on the 500,000. Class. Now, I actually explained something now. You borrow money from the bank, right? And you have to pay, let's say you borrow 20 naira. You have to spread it for 12 months. You will not pay it for that month, right? You pay it in the following month, right? Then the question now says 1% interest on outstanding, right? Now, even after the July, August, after the August, September, was it stated that they've paid the 41667? It wasn't stated. Now, the first interpreter says that he said, oh, you've already paid 1 month, 500,000 minus 41667. Is that not so? You have the balance. Then the balance will be charged at what? Okay, now let's do it this way. 500 minus 41667. What do you have? 500 minus 41667.
458,333.
458,333. Now, can we interpret it like that? Because my own interpretation is that, right? I'm just looking for a perfect way to explain it, is that the loan, you receive it becomes a cash inflow to you. Then you pay it. You will not pay it immediately, just like normal loan. You pay it following. Then when you pay it in the following month, right? Then they are telling you that you pay it in the following month, right? The question is, what is the total balance of the loan? What is the total of the loan? The total of the loan is 500. Don't forget, it was the 500,000 that you divide by 2 that gives what? 416 what? 41667. Is that also 41667? Right? Although that's my interpretation, Sha. If you charge 5%, you need to charge what is it? How many percent is it? How many percent? 2%, right? It's 2%, right? You need to charge 2% of the what? Of the 500,000. Right? When you charge 2% of the 500,000, what is the 2% of? Is it 2%?
It's 1 now.
It's 1%. What is the 1%?
1.
What is the 1%? What is the 1%? What is the 1%? What is the
5,000.
What is the 1%?
5,000.
5,000. Okay. $5,000. With 1 month moratorium and 1% interest on the outstanding. No, you can't charge. See, you can't charge. It is, see, let's look at it practically, because I don't know, the way I'm thinking about this is just the practical aspect of it, right? You cannot charge me 1% on the interest. Oh, the 1%. I think the 1% should be the interest on that 500,000. Should be the interest on it. Or in another case scenario is that you cannot charge me the part of saying that you want to charge 1% on the month that have not even, it's not that I default. No, it is not even part of it at all. Because who will accept that? Will you accept that? You will not accept that. Even your firm will not accept that they should charge 1% on the month that you've not, it's not that you default. Is that not so? Your firm, even your firm, will not what? They won't accept that. Now, what I'm thinking is that the 1%, right, should be on the 500,000 as what? As part of the interest, right? As part of the what? As part of the interest, that technically that you cannot charge me 1% interest on the month, right? On the following month, on the other month that I'm yet to default. It's not that I default the what? The agreement, or probably I did not actually breach what? The agreement. Class, am I communicating, please? Hello? Am I
Yes,
communicating?
yes, sir. Yes, sir.
Okay, now let's just move on. So, interest. Okay. Now I understand. Okay, let's think. Now, what happened here is that I was trying to explain something. Now, what happened here is that don't forget, you are paying it equally for 12 months. What are you paying? You are only paying the what? You borrow money. Won't you pay interest? Yes. Class, won't you pay interest? Now, the 500,000 you are paying equally is just the what? The cash price of it. What about the interest? That is the outstanding. Yes, I was trying to explain something. I was like, okay, something should. It can never be the month I'm yet to breach the contract of agreement or any other thing. Class, what is the outstanding? This question, it is a very technical question and it requires reasoning. If you can't reason very well, we will just miss it, right? Now, you borrow 500,000, right? You spread it. Only the 500,000. The question is, what is the interest? 1% interest after, what is outstanding? You spread the loan. What about the interest? Won't you pay interest? And the interest is the what? Is the outstanding. Do we get that? Hello? Do we get that?
Yeah, let's practicalize it now.
Yes. Okay, we should practicalize. Okay, that is a very good one. You borrow money from the bank, which is 50 naira. You spread the 50 naira for 5 months. You know, the 50, what they say we should spread is just the cash price of it. 50 naira, you spread it for 3 months. Now, what is the outstanding balance? Because the loan is not for free. It's not free, right? It's not free. You borrow it from the bank. It wasn't stated whether it is Jaiz Bank or other bank, right? It wasn't stated. So this is to tell you that, okay, just the cash that you spread, 50 naira. What about the interest? The interest is the outstanding balance. Osama, are you with me or against me?
I'm here.
Do you understand? Do you understand?
You understand.
You did not understand? Hey. Olalekan, namesake. Olalekan. Okay. What of Olaide?
Sir?
Okay, you are there.
Okay,
Okay, do you understand my
budget, it get us the bill.
Do you understand my explanation?
Yes, I understand your explanation, sir.
Okay. Thank you. It is simple analogy, right? Ozema borrow, let's say 50 naira from Pere. Ozema now say, okay, Spread this 15 naira. Exclude interest. Of course, it is not for free. Spread this 15 naira for 3 months. You only spread the amount without what? The inclusive of interest.
Interest. Okay.
Right? Now, when you spread it, the outstanding, of course, with demand for interest, person pay 1% of that money, of that particular loan. You pay 1%. Of course, it wasn't stated, but we need to think outside the box. Right? 1%. That 1%, that is your interest payable. You pay it. So you already pay, you will pay the what? The cash price, then you will pay the what? The interest, or you pay the cash price of the what? Of the loan. Then you still now pay the what? The interest of it.
Interest.
Do you understand now?
I understand.
Yeah, that's fine. So what of when we want to solve I think May 2015, right? May 2015, right? We still speak a lot of English because the problem here is it is not to speak, it is to interpret. You speak and interpret, right? That is the most important thing, right? So we can now move. I believe we all understand that, right? Is that well understood? Are we good to go? Class, are we good to go?
They are good to go.
Okay, that's fine. It's a very technical question. I can relate, right? Interest. Let me put it this way. Interest on loan. So what is the interest on loan? What is the interest on loan? When you 1% of it, what do you have?
5,000.
5,000, right?
5,000.
5,000. Was it stated that the interest will be paid, will be given a 1 month moratorium? No. Was it stated? No. It wasn't. So let's quickly move to the next. So the next one is the salary deductions are paid on preceding months. Salary deduction. Please, the person should mute his mic. Please mute your mic. Olalekan. Salary deductions are paid. I say mute your. Okay, thank you. Salary deduction are paid on preceding month basis. Where are the salary deductions? Salaries deductions preceding the year basis. June will be paid in July. June will be paid in July.
Paid in May.
Will be paid in May. I'm coming. If I'm the one that is interpreting it. Okay. Salaries deductions. Where is the salaries deduction? I'm coming. Salaries deduction are paid on preceding months basis. Ozioma, what did he say? Preceding the year basis. Ozioma?
Nothing, sir.
No. Say it now. Oh, no. No, say it now. Say it now.
Budget pedal.
It's not together. Just go on.
It's not interesting. I just want you to understand it. See, just follow, right? Interesting. I like the question because the question will challenge, like, the question is even challenging me as well, right? I have to think about, like, why is it like this? I have to think, right? Right? Now, salary deduction are paid on preceding month basis. What is the preceding month basis? May will be paid in June. June will
In
be paid
April.
in. I don't
In
understand.
June we paid in May. It's preceding now. I bet not know preceding again. Please, others should talk. Oh, like, let me know. It's like the month before.
No.
Abi, not the succeeding month
Follow.
now. Preceding is the one before.
Follow.
Abi,
Yes.
Let's see. I don't know. How should I? Alrighty.
Sir?
Okay.
Yeah,
Don't
I'm
worry.
listening.
Okay, don't worry. That's fine. We are in July. Okay. Practically, let's say we are in July. Right? What is the preceding month of July?
June.
June.
Thank you.
June.
So, which means that what you have in June will be paid in July.
May.
You are going back.
No. What you have in June will be paid in May.
Yes.
Because it's preceding month. That means what you have in May will be paid in April. You are going back.
Just like in tax, preceding year. When it
Not at all. Not at all. Mr. Ibrahim is right. Preceding month or year. You have to assess the word like in tax now. 2020 tax year will be assessed in 2021 of assessment. So it has to be the following month.
Interesting. Thank you, Bridget. See, if you, I don't know, the interpretation. Listen, man. See, I like the question, right?
If the preceding month is April.
See, let's say we are in April, right? We are in April now. What is the preceding month of April? Preceding is the last month, right? Which is what? Is May. Is May, right? Or is it May? Preceding is what? March. March is the preceding. March. Preceding. You want to do a tax computation. What is the preceding year? You are in 2025. What is the preceding year? Right? Preceding year is 2024. Is that not so? So why can't we say, because it is preceding year, we now say it is 2026? Right?
No.
Right?
The year that followed immediately. Yeah, no.
Interesting. It's fine.
Yeah, we are correct. We are correct, sir. Now because the preceding year, the preceding year is the year that followed the current year you are talking about now.
So that's why your previous interpretation is actually wrong. Do you get?
How?
Do you get?
No, how was I wrong now? Because I was dealing on months, not year. I was dealing on months.
Whether you say month, whether you say month or year, preceding month is still the same thing.
Yes, now. So everybody, we are correct, and everybody is correct.
Let's just continue and practicalize it on the solution. Sure.
No. You are not. It is not that everybody is correct. So I disagree with that statement. Right? No. Let's move on first. Let's move on, please. Wow. So what it means here is we just need for the one of July, August, and September. What is the preceding year or the preceding month of July. The preceding month of July is June, right? Which means the 49,480 will be paid in July. What is the preceding month? In August now. What is the preceding month of August?
July.
The preceding month of August is July. So you have 5,700 in August. You move to September. What is the preceding month of September? Is August.
August.
So August will be paid 52,750 in September. That is the interpretation, right? So the salaries deduction. The salary deduction. Salaries deduction. Right? So July. So July, 49,480. 49,480. So which one is for the one of July is what? 58,700. 58,700. Next.
52,750.
Thank you. 52,750. Right? We are done with that part. We move again. We move again to the sum. Right? The sum of 951,550 being fixed deposit will be matured in the month of July. Class, it is your money. It is your fixed deposit. It's your cash inflow. Is that not so? It is your what? It is your what? Cash inflow. It is your money, right? Is that not so? We matured in what? In July. And what is the July? The amount is what? That is your cash inflow. You can see the way I'm analyzing it one after the other, right? 951,550. Right? Fixed deposit is an inflow. Fixed deposit. July. What is the amount, class? The fixed deposit is 951,550. We matured in what? In July. What next? If the fixed deposit is matured in July, what next? Right? 500 will be reinvested same month. 500 will be what? Will be reinvested same month. With what? 0.5% interest credited the following month. Now, what it means is that your loan, it is a cash inflow, inflow. The 951,550 class. Now, then you will now do what? You reinvest 500. This 500, what will happen to the 500? Right? The 500 will be reinvested same month, which is July. It will now attract 0.5% interest credit credited the following month, which means that when you invest it in July, you what we call interest income, right? Interest income, and this interest income will be treated as other income, right? Other income in profit or loss. Is that also right? Interest what? Interest income. Class, am I communicating? The first one is the fixed deposit as an inflow, right? Then you pick 500, you reinvested, right? You charge 0.5% interest. Becomes what we call interest income, and it will be paid in the what? In the following month. What is the following month of July? Is August. Class, am I communicating? So we can have interest income 0.5% of 0.5%. What is this now? 0.5% of 500. What do we have?
2005.
250. Is it 5? Okay. It's
It's
2005.
2,500.
Which is
500.
August. You reinvested it in July, and will be paid when? Will be paid in July. It will be paid in August, in the following month. Class, I hope I'm communicating. The last part of it,
Yes, sir.
before we move to the purchase, before we go back to the purchase, bank charges is 1% of the total outflow from the bank payment.
Hello, sir. Sorry, sir. I have a question. Hello, sir.
Okay, go ahead.
Okay.
Hey, Bado.
The 500, are we not going to put it on the outflow since it was invested?
Yeah. Ọ̀tọ̀ nìyẹn. Irú self nìyẹn. Mo máa pa lọ self ló ń fẹ́ gbà. Wọ́n ní kó lọ mú 1.2 wá.
Who is that? Alaide, are you still in this our class? Thank you.
Sorry.
Thank you. And that's fine. That's a very good one. I love that. I love the thinking, right? That's a very good one. I've actually omitted that part. That out of this 950, that is your inflow. You took 500,000 to be reinvested, right? It will become, the 500,000 will become your outflow. Then you will receive interest income on the 500,000. Thank you so much, right? So we have here, we need to have the interest, the what is it called? Investment. They took the money in July. Is that also 500,000? That is a very good one. Look at that, right? Very good. That's fine. We are good. Class, are we good? Class, are we good?
Yes, sir.
Okay.
We are here.
Okay. Oluwa Nifemi, quickly, please. Quickly.
Oh, sorry, sir. Sir, since that the sum is 951,550, and we are investing the 500,000, but what about the difference? Like the two?
Hello, Nifemi. That is
Sir.
why you will now have receipt minus your payment, your inflow minus your what? Outflow. You already have 951 here. You have 500 here. The difference, you will still have the difference.
Okay.
Nifemi. Are we still together?
Yes, sir.
Do you get
Okay.
This is the format. Your inflow minus your outflow. You have your net cash flow. You have your cash balance. You have your closing balance. Right? So are we good? Quickly. Okay.
Yes, sir. Yes, sir.
Okay, that's fine. So bank charges is what? Is 1%. Is 1% of total outflow from the bank payment for the month. Total outflow, all your total outflow, right? All your total outflow. What is your total outflow? Your net salaries, expenses, salaries deduction. Which one again? They do the amount reinvested, which is the 500. The purchases, class. The purchases. The interest paid, right? Am I communicating, please? Am I communicating?
Yes, sir. Yes,
you
sir.
charge 1% of it. Your net salary, the expenses, the salary deductions, the purchases, the loan repayment, the interest on loan, right? The investment of 500. So the total, you charge 1% of it. On a monthly basis, we give what? Your bank charges. Right? I think that's the end of the question, but we are yet to solve for the 2% of the discount. Class, sincerely, I appreciate every one of you, right? I never take it for granted, right? Your contributions to this particular question, it is highly commendable, right? And I didn't even touch this question before I come to this class, right? I think because I believe it can be it is a cash budget, and I know it is based on my experience so far. It is what is it called? English, right? Our ability to interpret question, we'll be able to get it right. So on this note, sincerely, I have 15%, right? My battery, and it won't take us, honestly, right? Tomorrow, by God's grace, tomorrow is public holiday. We'll continue with the lecture, but be rest assured that we'll complete. I will look for a way for us to complete the budgeting as well as variance analysis. Just trust me. You must do it. We must do that too. We must complete it, right? So thank you so much. Your contribution is well recognized, right? That is why it is on recording, right? Because we solved the question together. We did it together, right? So the only part we need to check is for the purchase, right? Which when we come in our next class, we'll be able to analyze why how we should do the purchase, right? Tomorrow, hopefully tomorrow we'll continue from